Hi there traders, this is the third video devoted to the futures trading course. In this video we will talk about the peculiarities of trading futures, how long and short trading works. We will also show you how to open long and short positions in the trading terminal. Subscribe to the channel and we are going on. Let's talk about long and short trading. Long trading is opening a position for purchase. We go long when we believe that the price of the underlying asset will rise. Short position is selling. We sell the instrument when we expect the price to go lower. Let's start from opening and closing trades. Let's imagine that we are expecting the upward movement and we gonna long. To open long position, we first of all should select the working volume, the volume that we will be trading with. The new update of the CScalp includes such a feature where we can select the working volume just in dollars from the very beginning. For example, we would like to open the trade with $20 and we gonna long. To open long position with selected volume, we should click left mouse button on the red side, on the side of the sellers in the order book. The position is opened. Let's place the stop loss. To place a stop loss, we should press C button plus left mouse button. When we press C, we should be sure that there is a notification, stop loss and take profit. To place a take profit, we should do the same but in the opposite side of the order book. For example, we are waiting the price to come here, pressing the C button and left mouse button. If we want to close our position by the market, we should click right mouse button in the green zone, selecting the same volume. Now let's open short position. We select $20. Now let's imagine we would like to open short position by the market. We click right mouse button on the green side. The short position is opened. When we open position by the market, this position is opened immediately. Now let's do the same. We set up the stop loss, pressing C plus left mouse button here and take profit, doing the same on the opposite side when we are expecting our potential profit to appear. There was a stop loss hit and our position is closed. Now let's open the position using limit orders. We select the working volume and we click left mouse button on the green side to open long position. As you see, our limit orders are appeared here and each limit order is executed when the price reaches it. We put a stop loss, we put a take profit, and we can as well close our position in many ways. For example, we can close it by the market, selecting the same volume as I showed before, but we can close the position partially. For example, by $10, our position is $40 and we can close it by 10, placing several limit orders by $10. As you see, when we select $10, it's being automatically calculated in lots. $10, position for $10 is 83 lots. 25% of my position is already closed, and here we can replace our stop loss in break-even point, as you see. Now, if we want to close all the positions immediately with the limit orders, we press D. It will close all your positions and cancel all the current limit orders. Let's do the same for short position. We place limit orders to open short position, clicking right mouse button on the red side, on the side where we see sellers limit orders. The position is opened, we place stop loss, pressing C plus left mouse button, and here we placed the take profit. Let's again divide our position, fixing partially. We place several limit orders to fix our position using left mouse button on the green side. And let's imagine something has changed and we would like to immediately close this trade. We press D. I think that it's quite clear. Now let's figure out how short and long trading mechanics work. If we trade long position, it's quite simple and clear. We buy an instrument and we sell it when the price of this instrument goes higher. But many traders ask the question, how can we sell what we don't have actually? This operation is called a repo transaction. The term repo is a contraction of the sale and repurchase agreement. It refers to a transaction in which two parties simultaneously agree on two transactions. A sale of securities for cash followed by a forward repurchase on a prearranged date and price. This transaction is referred to as a repurchase agreement. The same thing happens when we're trading short. Let's look at an easy example with a painting. You come to an antique store knowing that tomorrow the price for painting X will drop by more than 50%. You borrow this painting from an antique store for a small commission with the obligation to return it back. You immediately go to the auction house and sell it for $10,000. And you immediately receive cash. The next day, indeed, the price of the painting drops to $2,000. And you were right, you have the difference. You remember your agreement with the antique shop, you buy this painting back for $2,000. And you have $8,000 left in cash as difference. You return your painting to the antique shop and pay a commission for use, let's say $200. And finally, your net profit is $7,000 and $8,000. And this is how short trading works. All this happens on the stock exchange much faster and automatically. In case you were wrong and the price for this asset increases next day, it costs $12,000. In this case, anyway, you have to buy back this instrument to return it to the antique shop. In this case, you have minus $2,000 loss plus commission, 2 and 2,000. This is how short trading works. In this video, we figured out how futures work. Futures trading requires theoretical and practical training from the trader. If you don't have any experience yet, we recommend you to take a look at our spot trading course. Click the link in the comments for our last video. Subscribe to the channel, hit the bell, and I wish you good luck in your trading.